Now a couple of words about Australian dollar. Australian dollar is once again close to 0.77 level. This level represents the obstacle which prevented the pair from going higher since the beginning of August. Plenty of weeks have ended below this line, despite the fact that the market was willing to test these higher levels. What happened in Australia? There was also a meeting of the central bank, the Reserve Bank of Australia, and after this meeting, the expectations of a near-term rate cut in Australia have declined, and also prospects of a rate cut in 2017 have declined as well. So comments of the Reserve Bank of Australia were rather positive, although the market didn't expect the RBA to cut rates as inflation in Australia has edged to the upside. Still, the fact that the central bank doesn't seem to be very concerned about relatively low inflation has diminished the possibility of a rate cut, and increased demand for Australian dollar, increased the market's willingness to search for higher yields in Australia. This is why we see the currency move towards 0.77. However, I would like to recommend you staying away from bullish position on Australian dollar, US dollar, as long as we don't make sure that Australian dollar, US dollar has managed to settle above this 0.77 mark. Last week's high, which can be seen on the 4-hour chart, was lower than the high of the previous week. And this creates also doubts that we will see a strong recovery in Australian dollar. So it is more sensible and more safe to wait until we have the confirmation that we have broken above this resistance. I think that if the situation is really changing to a more weaker US dollar versus commodity currencies, then we will have plenty of time to join this move of Australian dollar to the upside, as we see that there was a large consolidative pattern in Australian dollar, US dollar, and the break above its upper border will open a big scope for move higher. So don't worry that you get late to buy Australian dollar. At this point, buying is not worth it, in my opinion. The risks are too high. All in all, we have still lots of data releases from Australia this week, trade balance, retail sales, which will also have an impact on the pair. We also have many releases from the United States, which are going to bring significant volatility to this pair. So I believe that we will have plenty of opportunities to trade. On the 4-hour chart, we can see that the moving averages are currently below the price, and they have come together in a kind of consolidative sign, and this increases the risk that Australian dollar will have to return to the area of these moving averages. The pair is currently overbought. Stochastic indicator is above 80 mark and may reverse to the downside soon. So let's have a look at the 1-hour chart. Here the pair is also quite quite overbought. The moving averages may show some change, but for now, the longer term moving averages, the 200 period and 100 period, are still horizontal. So still it is likely that this move will come at least to the middle grounds around 0.7630, 0.7615 until we see some further developments in this currency pair. On the downside, support levels are located at 0.7650, 0.76, and 0.7575. Support levels provided by this 2016 support line are also very strong, so we don't recommend to sell Australian dollar past these levels. If we remember last week, I have told you that we will be trading in range between 0.77 and this support line on the downside, which was in the area of 0.7560, and this is exactly what we have seen. Australian dollar has some further scope to remain between these levels, which are limiting these currency pairs as on the upside and on the downside as well.